Level 1, $0. You earned almost nothing this year. A few weeks of work, a handful of paychecks. The rest was silence. You should be invisible to the system. You're not. The letter arrives in March, a white envelope with a federal seal in the corner. Hair. The scene includes the ASMR of a rusty mailbox. Your hands are already shaking before you open it. The IRS has questions about the refund you claimed, about the kid you listed as your dependent, about the $3,400 you needed for rent. Your refund is frozen. You read the letter 3 times, checking the form numbers and code references. The instructions point to other instructions you don't have access to. You don't have an accountant, and no $400 to hire someone.
You sit alone, with a paper that took everything you were counting on. The electricity gets shut off 2 weeks later. The landlord posts a notice on your door 3 weeks later. The refund meant to keep your family upright is held, while a system checks if your daughter is truly yours. You spend a month gathering documents, school records, medical bills, the lease. You mail copies in a manila envelope you bought at the dollar store. You wait. The refund stays frozen for 7 months. Nobody at the IRS is angry at you. Nobody is even thinking about you. You're a flag in a database, a category the system verifies cheaply. Your audit cost them nothing. Your case takes minutes. The poor are profitable to investigate because they can't fight back. The first rule: the IRS doesn't audit you because you're rich. It audits you because you're cheap to audit. Level 2, $15,000. You work. You file. You're poor enough that the government owes you money instead of the other way around. The Earned Income Tax Credit, $4,200 back this year. The biggest check you'll see in 12 months. The IRS audits you at 4 times the rate of someone making $200,000. You don't know this. Nobody at this level does. You assume the rich get audited. The news told you that. The politicians said it. The system says otherwise. Auditing you costs nothing. A correspondence audit, a letter, a questionnaire, a 90-day deadline. No agent, no meeting, no phone call. Just paperwork lands on your kitchen table, stopping your refund from arriving.
The letter asks for proof of your child,
residence, income, and expenses.
You go to the school for records.
You go to the doctor for bills.
You go to the landlord for a signed letter confirming your daughter sleeps in your apartment.
The landlord asks why. You don't know how to explain the federal government's request.
You take time off work to gather the papers. You lose 2 days of pay. $160 you can't afford to lose.
The audit hasn't even started costing you yet, but it's already cost you a week of groceries. You mail the documents, you wait. You call the IRS hotline. The hold time is 2 hours. You hang up at 90 minutes because your shift starts. You call again the next day. The agent reads from a script. Case in review, no timeline. Case is currently in review, and a timeline is not available at this time. Your refund stays frozen for 6 months. By the time it arrives, the eviction notice is already on your door. The second rule. At $15,000, the IRS doesn't see your hardship. The IRS sees your file size. Level 3, $45,000. The IRS goes silent.
You file your return, you get your refund. No letter, no audit, no questions. The same agency that froze your refund for 7 months at $15,000 doesn't even open your file at $45,000. You think this means you're safe. You're not safe. You're just not worth the time.
The audit rate at this level is 2 in 1,000, not because you're more honest or cleaner.
Auditing you isn't profitable. The math says it costs more to investigate you than they'd recover.
So the system moves on, looks elsewhere, picks easier targets.
Your taxes get withheld every paycheck. You don't see them. You don't feel them. They disappear before they arrive. $9,000 a year vanishes into a system you can't see or understand. You file in April because you have to. You get $400 back, feeling like the government did you a favor.
They didn't. They just held your money interest-free for 12 months, returning what was already yours. You don't have an accountant, you use software. You answer questions, click Next, sign electronically. The whole process takes 47 minutes. You don't know what half the deductions mean, or what you're missing. The system doesn't tell you. The wealthy have professionals who find every loophole. You have a $50 software subscription, giving you exactly what the IRS expects you to claim. The gap between those two experiences is measured in thousands of dollars you'll never see. The gap between those two experiences is measured in thousands of dollars you'll never see. Level 4, $100,000. 6 figures. The IRS notices you again. Not aggressively, quietly.
Your name moves into a different bucket inside their system. Returns at this level get cross-checked more carefully. Deductions get matched against industry averages. Algorithms compare your charitable giving to others in your tax bracket, flagging anything too generous. You don't know any of this is happening. Your refund still arrives, your return still processes.
But somewhere in West Virginia, your file is being scored against patterns the IRS doesn't tell you exist. You hire an accountant for the first time, $400 for the year. So if we keep better records, we can claim more deductions and potentially save money on your taxes.
He finds $1,800 in deductions you missed. He files extensions you didn't know you could request. He answers questions you didn't know you should ask. Now you see how beneficial these deductions are. Absolutely. Ready to start optimizing? Yes. The first time you meet him, you realize your last 15 years was guessing. As you can see, the calculations are far more intricate. I see. I never knew how deep.
Understanding entity structures and carryovers is crucial. Ah, so that's why the wealthy never file their own taxes. The system isn't designed for the average person to navigate alone. The system is designed for professionals who know which doors open and which doors stay locked.
The fourth rule: at $100,000, the IRS starts watching you, like a security camera, recording, not reacting. Keep better records. The gray zone. I understand. Let's discuss level 6. The stakes are higher. Visible to the IRS, but not yet a priority. The audit rate ticks up, not dramatically, but enough. Your accountant tells you to keep better records, document every business expense, save every receipt. The advice isn't paranoid, it's professional. You start receiving unexpected IRS correspondence, routine notices, verification requests. Oh, this is too much.
Adjustments to numbers you reported, each requiring a response within 30 days.
Each one is a small tax on your time you didn't budget for. Your accountant becomes a year-round expense, a monthly retainer. He coordinates with your financial advisor, filing quarterly estimated taxes you didn't know existed. He saves you $14,000 in his first full year working for you. You realize the wealthy don't pay less in absolute terms. They pay less as a percentage. Professionals find the gap between what you owe and what you can legally avoid owing. The fifth rule: at $250,000, the IRS isn't your enemy, it's your opponent. And opponents can be played if you have the right team. With this increase in audit risk, we need a strong strategy. We can build a strong team to address this. Level 6, $500,000. The audit rate jumps sharply, from 2 in 1,000 to 6 in 1,000. The audit risk has... You feel the shift before your accountant tells you. Notices come faster. Questions get more specific. The IRS wants documentation for things you didn't think required documentation. You have a CPA now, a real one, not a software subscription, not a seasonal preparer. The numbers look good. That's impressive. A professional with a relationship to your finances that lasts the entire calendar year. He charges $8,000. He saves you $40,000. It's a $40,000 saving. The math works. You attend a meeting with your CPA, where he walks you through tax strategy for the next 3 years. Not next April, 3 years. You learn that wealth taxation is planned, not reacted to.
The decisions you make in March affect what you owe 2 Aprils from now.
This kind of thinking didn't exist in your life at $45,000. The numbers weren't big enough to plan around. The 6th rule. At $500,000, you stop filing taxes and start managing them. The difference is the entire game. Level 7, $1,000. The IRS assigns you a different category, high income earner. The audit rate at $1,000 is 1.1%, 11 times higher than the middle class.
Your return gets reviewed by a human now, not just an algorithm. Their job is to find inconsistencies.
You don't fear this. You prepared for it. Your CPA built your return knowing it would be examined. Every deduction has documentation. Every shelter has legal precedent. Every aggressive position has a backup explanation. The IRS asks, you answer, the case closes. You learn the secret. Wealthy taxpayers don't avoid audits. They prepare for them.